What's up, people? How are you guys doing today? Luffy, and I'm coming back to you guys again with another video. Today's video, I want to talk to you guys about real estate investing and REITs. What are REITs, number one? Why you should probably get into REITs as opposed to investing in physical real estate. And then some good REITs that you should look into. So before I start anything off, I just want to say that I'm not your personal financial advisor. I'm just some guy on YouTube that you're watching. So if I recommend any investments or stocks or anything like that, at the end of the day, do your own due diligence and make sure that the information that I'm giving you is accurate. Obviously, I'm going to do my best job to give you guys the best information possible, but I'm also going to protect my ass from one of you guys suing me. So without further ado, what is a REIT? Okay, so a lot of people are interested in real estate. They want to own a real estate asset, and I am fully supportive of it. You should. And one of the biggest benefits right off the jump for investing in physical real estate as opposed to a REIT is that the lending terms on physical real estate are phenomenal. Right now, you can take out a loan, under 4%, buy a real estate investment, and you own and control a physical asset. And this does a lot for people on a psychological basis. Being able to see, feel, touch, lick, I don't know what you do on your free time, your investment is going to take you psychologically to like a happy, safe place. I get it. A lot of people are like, okay, I see it, I feel it, it's an asset. As opposed to it being more esoteric, online, it's just a bunch of numbers. You don't fully, truly understand what it is that you're buying. So I understand the allure behind purchasing physical real estate. Beyond that, the first-time home buyer, if you're a first-time home buyer, use and abuse the first-time homebuyer programs. Okay, don't abuse them in terms of do something illegal to get one of those programs, but use those programs, guys. They're meant and designed for people to use. So why the hell would you not use it? But that's pretty much where the buck stops with physical real estate. One of the biggest things that a lot of people don't understand with real estate game is that owning one real estate asset, for the most part, is a liability. It's not an asset. Owning one piece of real estate is a liability. Owning real estate is an asset. Okay? And there's an economy of scales differences. When you own one property, you have to make sure that that property cash flows to your needs. Meaning, you can't buy a house and then quit your job and expect to only make money off of one house, one tenant. Bad idea. What if that tenant doesn't pay? What if something breaks in the first month or before you ever even got a payment? Or what if there's a capital expenditure that needs to be done only 3 months in? Have you built up the reserves to pay for it, like a roof that needs to be replaced? Usually not. Only having one rental unit. That's why if you have 20 rental units, 30, 50, 10,000 rental units, you can leverage the income and cash flows of one rental unit to cover some deficiency that arose in another one of your units if you're running a relatively tight ship. Now, I recommend actually that a majority of people don't even look at real estate as an end game. It's something that you can be interested in and that you should do, but in the same way that you should invest in stocks. And it's why I'm going to talk about REITs in a second. Meaning that once you buy a house, you need to continue working, or an investment property, you need to continue working your job, because your job is going to act in the same function that having 30 other properties will. It's going to smooth out cash flow discrepancies. That's why it's important to have a strong 9-to-5 income and then throw the money that you have into these investments until you reach your financial freedom number. And then you can quit your 9-to-5 job and just rely off of this. But purchasing one asset is a liability most of the time. It's not an asset. Purchasing one property is a liability. Having a lot of properties is an asset. So then what are REITs? Okay, REITs are real estate investment trusts. They're basically these mega large funds that invest in things like that 50-story skyscraper and your local mall and the property that Walgreens is situated on, and Dollar General and LA Fitness. So if you guys look around, everywhere around you is real estate. and someone owns it, and it's usually not the business that's operating out of that space. So these real estate investment trusts usually focus in on stuff like public storage, office spaces, multifamily housing. They kind of run the whole gamut in terms of asset classes. And so I'm going to talk to you guys about some real estate investment trusts that you guys can invest in. And you're basically investing in the company that is going out and doing these. There's a lot of great real estate investment trusts. They're going to give you the same almost percentage return that you could get from holding physical asset. And it's so much more liquid. Okay, when you buy a house, you guys know how illiquid it is. I mean, yeah, you can sell the house real quick in maybe like a month, right? Like that's the time frame that we're talking about. We're talking about you can sell a property quickly in about a month, like from the decision to when you're gonna get the cash in your pocket, as opposed to a REIT. If you're holding one of these REITs, you can sell and have your order fulfilled almost immediately, if not within the hour, just depending on what price you're choosing to buy and sell at because of the amount of volume that's being traded across these REITs. So just to give you guys an example of, I have 4 different REITs listed here that I'm going to go over. Like I said in the beginning, though, this is not an endorsement from me of these individual REITs, but these are more examples of opportunities that you can potentially seize, especially given the fact that REIT prices have absolutely plummeted. And if you believe in the company's financial sheets, if you believe in the fact that they'll stick to their dividend, some of these yields are almost 15%, if not more. It's very difficult to find that controlling one real estate property. So to give you guys an example, there's Simon Property Group. It trades under the stock ticker SPG. They invest primarily in premium outlet malls, very usually higher end things, luxury for sure. I would say the average, median household income of someone who goes to one of their properties is about, it's over $100,000. So this is definitely a little bit more towards the higher end of stuff that they own, but they own a lot of malls around the country. This is actually one of the largest REITs in all of America. I believe Simon Property Group is a Fortune 100 company. It's currently trading at over a 10% yield. As of I make this video today, May 21st, they're trading at over a 10% yield, meaning that your annualized dividends, your annualized literally money that's being given to you for owning a share of this company is going to amount to over 10%, almost 15% of the amount of money that you put in on a per year basis, that's phenomenal ROI. That's just Simon Property Group. If you don't like the future of malls, for instance, and you're not really bullish on that, you can go to something like Federal Realty. Okay, they trade under the stock ticker FRT. Now, they mainly work with mixed-use centers, lifestyle centers, shopping centers. Here in Richmond, Virginia, they actually own Willow Lawn, if you guys are familiar with that property. So they like a lot of almost like community centers that have grocery stores and are grocery store tenants, anchor tenants. So if you have a large a shopping center that's secured by a Kroger's, Federal Realty might own that shopping center. Next up, I want to bring up Realty Income. Realty Income is known for paying out a monthly dividend. So, these other ones I was talking about, Simon Property Group and Federal Realty, I believe they pay quarterly dividends. So every 3 months, you'll get a little check or you'll get something deposited into your brokerage account for holding some shares. Realty Income pays you on a monthly basis a dividend. Now, granted, their dividend yield isn't as high as Simon Property Group, for instance, or the next company I'm going to talk about. But Realty Income focuses on triple net leased, Walgreens, LA Fitness, Dollar General, Walmart. They have a lot of commercial tenants across a lot of different industries, and they focus on triple net lease. So if you're not really bullish on shopping centers, for instance, so you're not, you're a little hesitant on, or malls, you're a little hesitant on like Simon Property Group, for instance, you can go to a company like Realty Income. It trades under the ticker symbol O. and they pay a monthly dividend, like I said. So, you can see 7-Elevens, Dollar Generals, LA Fitness, Walgreens, like I said. And then the last REIT I want to talk to you guys about is Starwood Property. They trade under STWD. So they have over a 10% yield as well. And their business is a little bit more nuanced than these other REITs that I was talking about. So Starwood Property, it's a real estate investment trust. They own multiple office buildings, multifamily units, but they also are involved with lending. So if you want exposure to a company that has real estate assets, but also lends on real estate construction and refinances, they're in the lending game as well, then Starwood Property is a good company to look at. So I named these 4 companies for you guys: Simon Property Group, Federal Realty, Realty Income, and Starwood Property, to give you guys an idea of some of the vast possibilities that are out there. Public Storage was another company that I mentioned earlier. They are literally public storage. They're the storage units. You guys should research these companies, check out their balance sheets, check out their financial income statements, see if you like how much money they're bringing in, if you think they can sustain these dividends that they're paying out, given their current market capitalization. But ultimately, I mention all of this to say that investing in physical real estate, investing in REITs, it doesn't really matter. What you need to do is to start. And for a lot of people, they're not going to have the 10, 20, 30, 40, 50,000 plus dollars that you're going to need to get started investing in physical real estate. And that's okay. You can invest in a REIT with $10, with $5, with $1. You can buy a fractional share of some of these REITs and be invested in real estate. At the end of the day, no matter what the investment, you're not going to make a lot of money if 1, you don't put in a lot of money, or 2, you don't create a lot of value. So you have to, at the end of the day, play the game. If this is the game that wealthy people play, then play it. Play it at your speed. It doesn't matter that you don't have $30,000. When you get $30,000, you'll know what to do with it. Invest it. That's all I wanted to tell you guys today. It doesn't matter about how much money you have, about where your starting point is. If you have $500,000, go do some new construction. Go put it down on a commercial property, 10-unit place, whatever. If you have $50,000, hey, go buy a house in cash. Get a loan to flip it. You're all good to go. If you have $5,000, maybe invest in yourself and your education. If you have $50, buy a REIT. Okay, guys? Because at the end of the day, that experience of buying it, whatever it is that you were trying to get from owning a physical real estate asset, you can get from owning a REIT as well. Thank you guys. I really appreciate you for watching this video. If you made it this far into the video, I would really appreciate it if you guys subscribe to my channel. If you guys liked the video, gave it a little thumbs up, and commented down below and gave me your opinion on REITs and on physical real estate. Why do you guys think a lot of people are drawn towards investing in physical real estate when investing in REITs is so much easier? There's no property management. All right, guys. One love. I'm out.